Hello everybody, this will be a common mistakes people make using Market Cipher. This will be a part 2 building off of my old video of common mistakes with Market Cipher. I'll leave a link in the description to that video. And if you guys learned something new from this video, please give me a like and a thumbs up. It really helps out me make more videos like this, and it supports and grows the channel. Anyways, the first most common mistakes people make is scalping, and especially scalping with very low time frame, such as like the 6 minute and down kind of. What they most commonly will do is they will just wait for really any divergence like so, and then they will enter based off of the confirmation of the divergence. So they'll enter on this candle about right here. They'll set their stop loss above the next swing low. And then they'll really like aim up and get greedy with their scalp and end up trying to take profits at even like a 1% move or a 3% move. I mean, I guess a 1% move did work out this time, but they will just keep the trade running without really taking profits and really setting up themselves for a winning trade. Now, really the most important thing when really scalping is that you don't want to lose money. And most of the time people do lose money scalping due to them being very greedy and not locking in profits right away. So as you can see here, I mean, this is a rare example kind of a 1% move, but really you want to be locking in profits very early. I'd say like on a 0.5% move to like anywhere to like a 0.3% move. It really depends on the time frame. I mean, as you go up to the 12-minute time frame, and the 12-minute is very powerful for scalping. However, people still get more greedy, and they'll really want to treat it as like a swing trade or a day trade in a way, when they should really be locking in profits at like a 0.5% move to like a 0.7% move, and then move your stop loss to entry price so you don't lose any more money, or just close the trade out altogether. Now with scalping too, is that I would recommend that you close the trade out mostly. Just take out like 50 to 75% of the trade out on your first take profit, and then really let the rest ride until like a 2% move until it really like starts to blast off. Because there are going to be some big winners, trust me, with scalping, but most of them you want to get in and out quick. That's why it's called scalping. So that is the first major thing on my list here. The next big major mistakes people make is trading without a plan. This can involve scalping to day trading to swing trading. And really the higher the time frame, the larger the move you can expect. So you can leave the position open a little bit longer. So for example, right now I am looking at a bullish divergence on the 2-minute right now. This is part of my trading plan, and I expect price to come down and then bounce off of a certain level. And then I kind of like map out and envision what Market Cipher B is doing based off of the current conditions that Market Cipher is giving me right now. So as you can see right here, we're getting a kind of a small wave down. And so I envision that Market Cipher will eventually make a wave up as price does kind of dump down and then bounce off this level. And then this would be a nice 2-hour bullish divergence where we have momentum coming up, making higher lows as we got price coming down, making lower lows. Basic of a divergence along with money flow. Money flow coming up along with it. Well, you really want money flow to be coming up because that is like your second confirmation, and it leads to a 4 times to 5 times as powerful move. And really the big thing and the well-known thing that Market Cipher is known for is its money flow, and the money flow is very accurate. And so that leads me to my third point. And really the third point is people not looking at money flow. I guess with crypto phase 2, he talks about the half an hour time frame money flow really as a good example. There's many other time frames to really be looking at it, But you can see right now, just based off of the half-an-hour time frame right now, that we are getting money flow slowly coming up, where we're getting this V-shape kind of recovery of money flow as money is coming into the asset. And so again, with identifying divergences too, you want to see money flow moving in the direction where you want price to go. You really want to double check that with your divergence and be patient and wait for a decent money flow and momentum setup, because that would lead to a 5 times more powerful move, and it could lead to a good probability of winning the trade. And the second to last thing I really want to talk about is people not using the larger time frames, especially with scalping or kind of swing trading too. Again, the 1 to 4 hour time frame is great for swing trading. I'd say the 24-minute to 1 hour is good for day trades. And then I guess the 12-minute and down, or 6-minute and down, you could say, is great for scalping. And really, what you want to do when looking for scalps is that you kind of want to see a domino effect kind of happening, where you have the VWAPs kind of pointing up in the direction you want the trade to go in. So in case you're looking for a long here or whatever, you want to say you're identified the divergence based off of the 12-minute time frame. So right here, you can see there's a 12-minute divergence right here. I'm going to go back in replay mode and actually just kind of walk through what was going on. So as you can see right here, that the VWAP was coming up, a 12-minute divergence was about to print. I'll actually go forward one until it does like start printing. So you'd enter your long based off of this. Just going down to the lower time frames, you want to see kind of the same thing happening, where you have a bullish divergence like so. Again, don't be too picky with connecting the dots or whatnot, but you can see in general that momentum is coming up as price is making lower lows based on this. And also you want to see money flow kind of agreeing with the 12-minute time frame. Next, you'll go down to the 3-minute, and again, you want to see the same thing kind of happening. Here you can really see and get a vision based off of the 3-minute time frame that money flow is coming up. You can see, just quickly drawing right here. So this is a good scalp trade, I'd say. And then finally, the 1-minute. I mean, you kind of want to see, in general, money flow generally kind of coming up. I mean, it was kind of thick at the beginning of the trade, and then where it is right now, you can see it's in the positive or the green. And so this would actually be a pretty good scalp to take. Again, don't be too greedy with locking in profits and waiting for a big move to arise out of this, as you need to really look at the larger time frames when doing this. And so I'll go to the 24-minute. This was actually a 24-minute divergence too, it looks like. 30-minute, the VWAP is coming up. You go to the 1 hour. VWAP is kind of pointing down, so that's kind of not a good thing. Right here, the VWAP is already above the 0 line. Go to the 3 hour. VWAP is coming up, so that's a good time. And the VWAP is coming up and almost touching the 0 line on the 4 hours. So mostly you want to see the larger time frames, mainly I guess when scalping, the 30-minute to 4 hour, and the more you see the VWAP kind of pointing towards the 0 line in the direction you want it to, the more high probability that you will win the trades. In this term, it's a scalp. And now finally, the last thing that I really want to talk about is people not identifying the trend or what price is doing, like kind of the actions of the market. A big thing that I've learned is the trend is your friend until the end. And right now we can be argued that we are in a bullish trend where we're making higher lows as we are making higher highs, kind of. Same as right here, higher low, higher low. And so I'd be careful and identify the strategy that you're using. If it's like the 424, 312, or whatnot, those work well in the trending markets. And I see people use those in the sideways markets and get wrecked pretty bad by using that strategy when it's not really made for that point of price behavior, I'd best say. So again, it works well in trending markets, so uptrend in a clear downtrend. What it doesn't work well in is a sideways market. And here you can identify a sideways market when it's kind of boxy and kind of, well, obviously going sideways, but it's kind of ranging. And really when you can identify an uptrend is when price tends to break out of that specific trend. So you can just do a horizontal line on the highs of the trend, and when price does end up breaking out of that trend, then you can get a kind of a clear idea of where the trend is heading and what it's doing. And so in this example, once price broke out above 40K, I'd say there was a clear kind of uptrend as price was making higher lows, as you can see right here, and it continued going up. And here the 412 and 312 strategy worked pretty well with this trend. Again, thank you for watching the whole video. I hope you guys learned something new from it. Please give me a like and a subscribe if you haven't already. Plus, I'll leave part 1 of the video of common market cipher mistakes in the description. Thanks. Bye.